the one stock that I've been using as a value example. Now all of a sudden it's going to take a 7% nosedive in a single day.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots. It's a humble pie edition of the Daily Dots. And I am joined, as always, by the brain trust himself, Mr. Chase Taylor. So, I mean, right out of the gates, we got to get to, the can't miss undervalued investment of the year, Google.
Yep. Whoops.
Yep. That was, you and I were just saying, I laughed the minute I saw the news come out because I was like, yes. So because I've been pounding on the table on that particular stock, that has to happen. The only thing that could have gone worse is had Apple gapped up on the news somehow.
Yeah, that would not have been fun.
Because remember I was saying how one of my favorite trades is short Apple, long Google. But yet another reminder of, this is why you got to manage risk. This is why you can't size positions too big. And the funny thing is I've been tempted to size that position even larger recently, and we had discussed it, and that's why we didn't. Now the interesting thing about it is, if this leads to other weakness, I'll tell you what. I mean, I don't think either one of us want to sell here for obvious reasons. Yeah. But for those of you that don't know, so it came out today, the antitrust stuff against Google. It looks like, and it's still up in the air. There's nothing that's concrete. Nothing's been decided yet, but basically the rumor is, or the talk on the street is more than a rumor, is that, Google, the feds will make Google quit paying Apple $20 billion to be the default search on the iPhone.
Apple is talking about opening it up to a bunch of different AI platforms instead of having Google as default.
Yeah. Now Apple doesn't want to.
Yeah, they made that kind of clear.
Yeah. It's kind of it's one of those things that's really is a mutually beneficial setup, for both companies. And yeah, nothing is cast in stone. Nothing is set in stone at this point, but and the deal goes through September of 26, no matter what, right?
Apple would owe Google a bunch of money if they pulled it before then, or all the revenue sharing would go away, so they would lose tons of income themselves. So I assume they would run out the clock unless the feds made them. And even then, the feds, it's not that far away. It's less than a year and a half. I'm sure the feds would be like, yeah, well, when that one expires, don't roll it over.
Yeah. Now. The tough part about this, because if I look at Google stock here, trading at, what are we, 16 and a half, 17, right? Somewhere there, 16, let's just call it 16 and a half times earnings. By and large, I would think that this move is already pretty priced in, because if this just went through with nothing else changing, right? You'd be looking at about a net of about a $40 billion drop in revenue to Google.
Based on our napkin math. Yeah.
Yeah. Now that equates to about 13% hit on the revenue side. Right. Flip side is you got a company that's still growing at 14% a year. So they could fill that gap in. Plus it's not considered, the revenue gap could also, to some degree will be filled in by Waymo, but Waymo is profit-free growth at this point.
Yeah,
right?
Really that's a longer term thing.
You're
talking, I think $1 billion in revenue at most.
Yeah.
Last year. And we think about cloud though. Cloud's $43 billion in revenue, growing at 30%. So that's where you would want to get that fill in. And if you kept growing at this rate, Google Cloud grows to the size of Google Search in about 6 years.
Yeah.
Because Search is the behemoth. It's 200 of the 350 billion in revenue right now. So
yeah. So I mean, on a fundamental basis, I don't think that you probably have a lot more downside here in Google. but in this market, I wouldn't be surprised to see Google sell off some more from here on that news. Again, I think you're kind of in one of those places where, stock gets cheap and can continue to get cheaper. I mean, prior to this, I think there was that threat that was weighing on their valuation a little bit of the antitrust side.
Yeah.
The flip side, now, to be fair though, this ruling against or potentially against Google comes from the feds, the DOJ looking at Apple, right, on their anti-competitive practices, meaning.
Well, but it goes both ways. They're looking into both, and they don't like the way either of them have set up that structure.
Right. Now, it doesn't mean they can't do this, but at this point, as a Google shareholder, if that's now, look, it's a hit. There's no question about it. But as a Google shareholder, if that is the totality of what is levied against Google in this process, I think net it's a win, right? If they don't have to divest search, if they don't have to divest Google, if you know what I'm saying? Now, in a way, it sort of is like a divestment because it takes away $40 billion in revenue.
And we're still talking about doing that. Like that whole maybe making them strip themselves of Chrome and all that stuff seemingly still on the table. And to me, that would be big because let's say right now you use, the default search or the default browser, which goes to Google, and then they take that away. People that like Google but have never downloaded the Chrome app would probably download the Chrome app to keep their search Google. So if they made them get rid of Chrome and stop being the search, like then it's difficult to even get to Google to search on an iPhone. Yeah, which half of their search comes from the iPhone essentially. So that would be a big deal.
That would also be a very odd ruling because now all of a sudden you basically would have legislated an anti-competitive measure against Google.
Pretty much. And at that point, if I'm Google, I just make a really great new Gemini app. Yeah, to capture everything, and I find a way to make sure that because what Apple's talking about doing is no default. The search is just like pick what you want. Here's a bunch of AI, possibilities. Gemini would be one of the possibilities. So if that opens itself up that way, it becomes like whoever has the best like AI search mousetrap is going to start doing really well.
Yeah. Well, and this goes, and you and I have been talking about Perplexity and all these other.
And Apple said they've been talking to him, which makes me, I wish they would IPO yesterday.
Yeah. Yeah. The other thing, when we talk about a $40 billion loss in revenue, that is like a worst case scenario. That assumes that they make nothing off of search off iPhones. Right. Whereas the way it looks now, if it rolled out that way, theoretically, you'd still be able to like, for instance, I have an iPhone. I use, not because I've owned the stock, I've always preferred Google and Chrome over Safari. And so I would download Chrome and use that. I'd continue to, I'm sure a lot of other people would. So by looking at it and saying, okay, if that goes through, they lose 40 billion. There's no telling what that end number is, but I feel like that's kind of a safe way to look at it, evaluate the company, because it's not going to be 40. Now, is it going to be 20? Is it going to be 30? You don't know.
Right. So my napkin math was 60 billion hit, but they save 20 billion. They don't have to pay to Apple anymore. Net's 40. But like you say, that's sort of if it goes to nothing. But a lot of people are just going to move, like they would still go to Gemini. They would still go to the Chrome app. Like you're not going to go to zero, at least not quickly. Now, if some, if ChatGPT or Claude or Grok or Perplexity really start grabbing market share through that, then sure, like this could be a significant hit. But even there, like if you keep growing cloud and YouTube and subscriptions and Waymo, does what we think is possible, then it's more of a 2-year like difficult problem, a bit of a valley to get through. And then to me, still a great company. You'd be fine. It's just tough for them now because search is such a giant piece of their growth. What's funny is, 6 months ago, 9 months ago, whenever I started really using Perplexity a lot, that was when I was like, Google's in trouble because this is way better. But the next thing you knew, that top thing was Gemini doing virtually the same thing. And they've done, way more people are using Gemini than are using Perplexity because we're all so used to just going to Google. Their search revenue is growing at 13%. So like they haven't really lost much. However, I think it was maybe last month for the first time, Apple saw the number of people searching like on, what is it called? Their stupid browser.
Safari
it actually started to fall for really the first time. But Safari's awful. Like, so I don't know why anyone would use it anyways, personally, but
yeah, the one piece of advice I would give, and again, not a recommendation, but if I wasn't in Google right now, I think you could start accumulating here, but I would look to pick up more on weakness. I would assume you would see some more weakness at some point, even if it's just due to broader markets selling off to a certain degree. But, I don't think this is something where you need to jump in there and start piling it on right here. I would think that this would lead to some more weakness, some muddy,
right.
Some
we're at 11. We're at an 11-day low. It's not like it crashed or something, but
yeah. So I would be patient, building a position, but I also will say that, I'm going to keep a close eye on it, but I would also expect us throughout this process to take advantage of this and probably buy some more at some point. Again, unless something
keeps going down.
Yeah. Unless something changes. Cause the underlying company is still, I think even with this going on, I think Google's still really undervalued.
The way I see it is if that search got whacked hard, let's say 70% hit to the Apple adjacent search, and then you saw for any reason YouTube have a hiccup or the cloud have a hiccup or both, then it's like, okay, now things have changed, worthy of actually being bearish on Google. But if the rest of the verticals are doing their job and this hit is call it less than 10% of revenue, like I'd be willing to ride that out.
Yeah. Just just because the underlying value is still, all the things that we've been talking about, that doesn't change any of those things whatsoever. And then also too, with these situations, you got to keep, this is not, like I said, this is not set in stone. These things tend to be fluid. But yeah, it's what markets do to you, right? Like that was the thing I was laughing about. Like, oh, but here we go. Of course, the one stock that I've been using as a value example, now all of a sudden it's going to take a 7% nosedive in a single day because of some antitrust, word about town. Okay. So that's the Google story. Run us through the rest of the indexes and other stuff that we saw today. And yeah.
S&P closed up 0.43, about the same for the Qs. Small caps up 0.3, equal weight up 0.66, Mag 7 down 0.4, mostly Google, obviously. You had oil down 2%, silver down to over 2%, gold down about 1.4. Dollar was up 0.5%. 2-year yield was flat, 10-year yield down about 3 basis points. And obviously we had the Fed today. Not much to say about it, as we kind of anticipated. They didn't do anything. They didn't signal doing anything. They basically just said, look, super uncertain. The risk to both mandates is large and growing. We're going to wait until we see way more data that shows us kind of which way this thing's going. Mm. And I think I have no problem with their approach right now. It's like, look, this may create a bunch of inflation that becomes a big problem, or it may not, but it may blow up jobs, and then that's a big problem. So like they're just kind of on standby until the market tells them more about what they should be doing. Not to mention the policy that changes every day until we kind of get a better idea where that's actually going to go.
Yeah. Not a lot of movement on the rate side of things today, right?
Pretty flat. Yep.
Yeah.
No, we had we still don't. I don't know the details yet, other than the headline that Trump was going to remove the chip export curbs. But I don't know what that means, and if he's going to just put on his own or change them, or it's just a free for all where China can buy all the chips they want. Like I don't know where that stands. Just saw the headline. Maybe more has come out since, but that kind of jolted us at the end of the day. It was obviously good for the chip stocks and AI stocks, but not enough details to really have much on that.
You know what I find a little bit interesting, and I'll also say a bit surprising. I think you and I had a similar reaction last night as soon as that news came out about Besant and Greer beginning talks with China. And I kept checking my phone at after hours because I was like, okay, this thing's going to take off, right? It's just going to go ballistic. And it really didn't. That move faded overnight. It's also interesting to me where you're at on the charts right now and that move faded, right? You're just a couple percent below the 200-day moving average. You're bumping up against it. There was all of this, just 2-3 days ago, anybody that believed that this was a bear market rally and wasn't going to highs was an idiot, right? You're not out of the woods. I don't understand that exuberance and that approach because, you're still looking at things here and you're going, you're not out of the woods. The tariffs are still just beginning to take a bite.
Powell said that today. He was like, look, the tariff shock hasn't even hit. Like,
no.
So, because people were asking him some questions as if like, well, the data hasn't gotten that bad yet. He's like, yeah, but
it's not even impacting.
No one's paid anything yet. Like, we don't even know. We're not even confident on how long the lag is before that stuff really hits. So like, we'll see.
It continues to fascinate me the way that this market does and does not price things in, right? I mean, it will price in the best case scenarios readily. And yet will just refuse to price in anything bad until it walks right into it. It's really unique. It's just, and I know I've made that observation many times. It's just, it kind of flies in the face of what you've learned to know about markets. You know what I mean?
Yeah, the shark's not a problem until its teeth are on your leg. It's kind of the way the market.
That's right. It's a good way to put it.
it.
What else? I didn't. I was pretty busy, so I was market spectating less than I normally am during the day. What else caught your eye?
Another. We talked a little bit about uranium yesterday. Another good day there. And there was some more positive news flow. Besant mentioned nuclear today in one of his hearings on the Hill. So a little bit of follow through after a kind of a quiet break higher there. Trying to think what else today. So the agriculture stuff that I liked, most of the actual commodity futures prices continue to just make me sad and stop me out. But the fertilizer companies, like that stuff, like the equity side in the ag space continues to do well. Somewhat surprisingly, given the backdrop of the actual commodity prices. And that's like no one cares about that. No one's talking about it, looking at it. So I find that one somewhat interesting. I think the currency stuff is like kind of calmed down. China, I would say they had they did some policy stuff and had a meeting. People kind of got their hopes up there. Nothing really happened other than some monetary policy stuff, which is completely useless in China to do anything monetary policy. So if you hear them talking about cutting rates, it literally does not matter. They did that. They cut rates. It's just pushing on a string.
You know what I did see interesting though? I just saw a headline. I haven't had a chance to dig into it. And I was asked about it on another interview I was doing today. The Fed bought $20 billion of 3-year notes. Did you see that?
No, but that may be a total nothing burger. I mean, when it comes to their balance sheet, I mean,
they're moving stuff around.
Right. It's more active than you would think. But
yeah.
I mean, we have the data for the balance sheets. We know the balance sheet continues to run down. So
yeah, I was just curious to see a purchase of 3-year notes. I
mean, they're always in there buying, especially on the short end. Like, and if you think about it, like as you have stuff rolling off,
they've got to, you got to
replenish it other than what you're doing through QT. And
okay.
since you're like, look, QT is this much. So if you're naturally going to unwind more, you have to buy back to make sure that you plug that hole.
Right. I would just, it's curious. It would be curious to me. I didn't think that they'd have to worry, and maybe I'm not looking at this the right way, but I was surprised to see them. If they want QT, I would just think they'd keep letting the short end sell off, just roll off.
The reality is what they want to do is let duration roll off.
No, for sure. But yeah,
so then buying 3 may be while they let some 10, 20, 30 stuff roll off, they want to reduce that average weighted maturity over time a lot, especially some of the like board members and stuff like feel very strongly about getting out of the duration game.
So they're effectively kind of like you and I predicted. They're kind of playing the exact same game the Yellen was playing. Different mechanism, but
yeah, they want to be short and only, and in a way, it's the opposite in that the most stimulative thing they can do is buy duration and hold those down to get housing activity and car loan activity and all that stuff up. So if they get out of that game and let that kind of find its own price in the market while leaning heavily on bills, that's a way for them to kind of take their thumb off the market scale in a way that they haven't done since 2008, I guess. I don't know.
Yeah.
They've had plenty of duration since the GFC. And a lot of people at the Fed have talked openly about, like, we want to get back to a bills only policy. T-bills, nothing passed. Like, we don't do that anymore. Because they recognize, I think, whenever you have housing prices go up 40% a year, that's when you kind of realize, like, ooh, like we helped that happen, and that's not healthy.
Yeah. Rates were just way too low. Yeah. Shocker. Anything else? Kind of a quiet day, honestly. Not a lot going on.
Data is so chill this week. So we had the Fed and mortgage applications, and that was literally it for data.
Your favorite company, Carvana, was getting smacked around in after hours. Pretty good. You're just a big believer.
Big fan.
Oh, yeah. Not that bad. They bounced right back. They're only down 3.5.
Well, there you go.
They were down 11% at one point.
Still got time to buy some more puts, I guess.
God, that's just a flaming pile of garbage. And the headlines, their profits soar, beating analyst expectations. Then you start going down through the data. If this thing isn't fraudulent, I don't know what is. They're to the point right now. You and I were reading this. These guys are extending. They're extending loans on cars. So cars that they've already financed, they're going back and extending loans. The only reason you extend loans is because the people can't pay them.
Literally, yeah.
And they're like, profit soars. You're like, yeah, when you're giving a bunch of money away and booking those profits on things that people can't pay back, your profit's going to look really good. Like I was telling you, like the most profitable business in the world is selling warranties and not putting aside reserves to back them.
Yeah.
Right. And I'm not saying that they're doing that. I guarantee you, if you go through the books, you're going to see extraordinarily low loan loss provisions. I bet you
if you go for a long time without marking the market, eventually you have to mark it all to market, and it's usually not fun. And I just think that's where they're heading.
Yeah.
But you have to have proper downturn for them to get, called on it. So we have to actually have that for that to work out.
There's a lot of stupid stocks out there. This to me is at the front of the pack. Maybe not the dumbest, but it's top 5.
Yeah, for sure. One thing I did want to mention, this is more sort of geopolitical and not necessarily financial, but I don't know. To me, it was important. I'm sure a lot of people know India did some strikes in Pakistan, both proper and in Kashmir. And they had a few aircraft get shot down, which is notable because that tells you that, obviously it could have been a planning failure, intelligence failure from the Indian side, but it also may just be that Pakistan's air defense, which comes from China, is really good. And that was like the notable thing to me, is like, oh, maybe Chinese surface air missiles are better than India realized, more capable than we all realized. That just a small geopolitical thing that probably no one's going to be thinking about, but if that stuff's that good, that could be important in the future. Man, a lot of global tensions out there. Yeah, and for those who aren't at home, both of those countries have nuclear weapons, and a lot of them. So it's that's why that gets in. Anytime those two have a flare up, it's important. Yeah. Last I saw, and I haven't kept up super close. I don't think this thing's going to keep re-escalating. It seems like both sides, I think, got what they needed out of the little escalation there. But India cut Pakistan off from water. They've had a water agreement since the 60s, and they've never cut it off in prior times, which that's a big deal. And it's kind of weird because we sort of support India, China sort of supports Pakistan. So like, usually when we have proxy wars with other great powers, it's not nuclear states. So
yeah,
you would hope this didn't turn into a proxy thing, but
yeah, no, and honestly, the last thing the world needs is another conflict, especially something like that.
I saw where on the Pakistan side, they basically said, look, if they're done, we're done, kind of, signaling like, if that was all you're doing, like we'll let it lie here. So you would hope both sides are like, all right, it's over.
Yeah, one can hope. I don't really have any much. Like I said, like it was kind of a slow day. No big earnings were announced.
No, for all of our 45-minute shows, it's probably okay to do a couple less.
Yep. All right, guys. Well, hey, and as always, get us on YouTube. Just search Know Your Risk Podcast. We're on Instagram, Twitter, TikTok. Instaface, as always. TikTok's where I watch. That's where I get all my stuff. I'm a huge TikTok guy.
I love when people send me the TikTok links because I don't have TikTok and I can't watch it because they won't even let you watch it without having it downloaded, which is rude.
Yeah, it is very rude. And also, I'm not going to download it.
Yeah.
I need TikTok like I need a hole in my head.
Exactly. But you guys watch us on TikTok.
Yeah. Yes. Of course.
Share with the kids.
Yes. We're big supporters of the TikTok platform. Anyway, that does it for us today, guys. So, get on YouTube, search us at Know Your Risk Podcast. You guys know the deal. Until then, have a wonderful evening. We'll see you tomorrow. You're listening to Know Your Risk Radio or Know Your Risk Podcast. Download and subscribe at knowyourriskradio.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.